time for your morning RBI. And this one is about a guest who is coming up next, and sometimes the pretty incredible stories it takes to start a multi-billion-dollar company. Swedish payment firm Klarna is worth now more than $10 billion. It was started by a couple of buddies who met while flipping burgers at Burger King. And while in business school later, they decided to take a trip around the world without flying. But your next guest missed the boat, literally, and so couldn't make it back in time for exams. So under Swedish rules, he had to work for a year before returning to business school. And in that time, he got a job as a telephone salesperson. In that time, he realized companies have a hard time doing fast transactions on the internet, and the light bulb, bing, came on. And even though the idea for Klarna finished near the bottom of a business school idea competition the next year, it is now one of the most valuable companies in Europe and really the world, and its founders are likely billionaires. Missing the boat, a good thing. Random, but interesting. And joining us now in a CNBC exclusive is Klarna co-founder and CEO SEBASTIAN and I hope you like that bit of history. Another RBI for our viewers, SEBASTIAN, is you, my friend, are the last person that I had dinner with in New York City. It was like March 3rd or 4th prior to the complete lockdown. So we do have that in common. By the way, you guys securing a huge new round of funding. Congratulations. To what do you plan to do with this large new influx of cash that you have received?
Thank you so much for that introduction. I was laughing to hear that summary of my life in those 15 seconds. It's been great. And I did enjoy that dinner a lot. It was quite interesting because US was still kind of not sure how COVID was going to hit. And I was coming from Europe where people were already locking down. So it was just this very odd dinner, actually. To answer your question, look, I think it's amazing. We're very happy about this. Obviously, that the support. It's I think it's a sentiment. It's a testament to the success in the U.S. Us getting close to 10 million U.S. consumers. Being live with Sephora, H&M, Abercrombie Fitch in the U.S. is super amazing. For us, we are big believers that there's an opportunity now to genuinely disrupt the trillion-dollar industry that is the credit card industry, an industry that's lost sight of its customers, isn't customer-centric, is built on old legacy systems. And obviously this money is here to support us try to be a positive force in changing that industry.
Yeah, I remember that dinner was a bit odd. And I remember you're like, oh, I just flew in from Europe. I'm like, really? As I'm like sort of doing this. Anyway, I'm moving away. Everything worked out, though, SEBASTIAN. It's funny because in Internet 1.0, you bought something online, you put in your credit card number. I would say Internet 2.0, you had the option of a credit card or maybe PayPal. And now I see your sort of famous pink logo more and more. Is it more than just kind of a random thing? SEBASTIAN, do you believe that these sort of these spaced out micro payments are going to become just kind of the way that we pay from now on, like a PayPal?
Well, I think it is because if you think about it, again, first, obviously, one big reason why this is working is because in the US nowadays, the younger generation don't have credit cards, they have debit cards. And when you shop online with a debit card online, it's not as good of an experience. You're shipping your salary money to maybe receive a product that looks like that picture. If you do return, the merchant might hold on 3 weeks to your salary money where you're waiting to get the money back. There's a lot of issues that people with debit card face. And so our product solves for that. I mean, the power of being able to get the product, touch and feel it first, and then pay for it, the ability to get access to financing or put it on installments with no interest, where the merchant pays for the financing cost. All of these things are big benefits to consumers. And we've seen a big change. Take China as another example. People are now telling me that almost 50% of Alipay's transactions are buy now, pay later. So this is a massive global trend that is really coming to the US right now. And we're very excited about it. And it makes sense for the consumer. It's all about consumer centricity and power for the consumer.
And we showed some of your retail partners. And for our viewers that may not be aware, by the way, what you guys do basically is, let's say I buy something online from Sonos for $800. I can pay it all now, or I can buy it in 10 installments of, whatever it might be, 800 plus a little bit of money on your side each month. You have 200,000 retail partners. What is the biggest sticking point for your new customers? You're going out you approach a new business partner potentially. What's their biggest drawback, the hardest selling point for you guys to make to them?
Well, I don't think it is, to be honest, that hard today. I mean, if you look at something like we've been live now with Sephora a couple of months in the US, they've seen a massive increase in the average order value. They've seen an increase in conversion rate. We've been able to bring them new customers in the younger generation. So I think that like all of these things add up. Now it is slightly more expensive than your credit card processing fee. So you got to really take a view on this as a customer acquisition and conversion rate and AOV lift play. But as people kind of get over that and realize that it's really working for their businesses to grow faster, then you don't really get much pushback from that perspective.
Well, obviously your business school professors are the ones who put you guys near the bottom of the competition. Were wildly off. What exactly in your entrepreneurial journey, building the company, Sebastian, did you and your partners see that others missed?
Wow. Look, I could talk about that for a long period of time, but I just think that we've been, very focused on this now. I've been doing this for 15 years. We were 23 years old back then when we started, right? And so luckily I'm not that old yet, and I still want to, do this for another 15 years. I think trying to disrupt this retail banking industry and this credit card industry, it is an entrepreneurial dream because you have these legacy players, you have these barriers of entry, regulatory hurdles. And that's both what makes it so challenging and hard, but also what makes it so exciting and what makes the opportunity so massive. So I think we just saw that there is a better way for consumers. The traditional way of credit cards, which are about putting you and kind of giving you a grace period and then trying to convince you to put your groceries on revolving 29% interest rate, is just not the way of the future. Consumers have grown tired of those tactics. They want to see something different. We're providing a credit that is free for the consumer, so it's beneficial. It's an installment, which is much easier to understand compared to revolving. That's confusing. What am I really borrowing here? It's like very clear. I'm paying this every second week. So I think it's just it's just more customer-centric approach, and that's been lacking in retail banking. To be honest, it's unfortunately an industry that's lost sight of its customers.